right, Robert, first episode of 2024. Welcome back to Real Estate Chat. And you know what?
What?
This is how we're going to start the year. Real estate haters who follow our channel, there's a bit of good news today because real estate prices year over year have actually inched down.
Doesn't matter.
What do you mean, Robert? It doesn't matter.
Do you remember what December of 2023, I'm sorry, 2022 was like? Of course you don't.
Can barely
So
remember
unless you
last week, but
you can remember last week, that was 2023, and that's what we
yeah.
are. Comparing it to a year ago is like, anyway.
Well, okay.
We'll
Well, on
we'll
this
we'll we'll,
episode,
we'll see how this all works out.
we'll see how this works on this episode of Real Estate Chat with
Jonder Perez.
and Robert Eid. We're going to dive deep into how 2023 shaped up with Robert's charts, graphs, analysis, data. And we're going to see, did the real estate haters win 2023, or is something, industry-wide changing or market changing going to happen in 2024 that will allow for a market rebound to happen? Let's jump right into this and we'll load up Robert's charts here. And Robert, let's tell the story, starting with sales, how sales shaped up for the year.
Well, still sales shaped up poorly. We've been monitoring it all the way along, and we run most of the time 30 to 40% below the 10-year average. And so guess what? It happened again, 30%. And so we shouldn't expect anything spectacular in a market where we're 30% below average. What we're saved by is the balance between buyers and sellers. There's 30%, 40% fewer home sellers. And so it's the same dynamic that we saw all through the boom in terms of the ratios, but the numbers are way down, yes.
All right, so numbers are way down. And I like how you start your chart here because this is what you call the school year sales chart. And guide us through for some real estate chat viewers who have just discovered this channel and who will consider liking and subscribing to our channel. Explain how this format works versus the traditional January
Okay,
to
well, January to December is a calendar year. And this real estate market works on a fiscal year based around the school year, the weather, but this is the school year. So it starts in September, and we have a fall rally, and then we have this doldrums at the end of the year. And so this shows it, rather than being at the two extremes that you just don't see it being a continuous market. This shows the low point, and then we go into the spring rally, and then it falls down, calms down in the summer doldrums, and then it starts over again. So this is the school year, fiscal year, whatever you want to call it, actual real estate year.
and this is where we are.
That's it. That's why that's pointed. That dot's pointing there. Yeah,
Okay, and so a
but
lot
it's
of
always that way. It's always that way.
yeah, and then a lot of commentators will say, okay, prices are going to go up. We're going to be talking this year about, what's going to happen with interest rates, just as we've been talking about in past episodes of Real Estate Chat.
Mhm.
Robert, prices will go up because that's what happens every year.
Okay. There's a surprise that happened in 2023 that we didn't understand, and that could happen again, in that there are many people talking up the decrease in interest rates. Now, everybody's saying it's going to be in the second half. Somebody says it's going to be in April. Some people are saying it's going to be a half or 3/4 or 1% in the course of the whole year. Now, that's not enough to make a difference. A year ago, we were in the doldrums, and we busted out when there was a pause, 3 times in a row. And so people said, okay, this is as bad as it's going to get. Let's buy. But we've now had a year more experience. Once bitten, twice shy may apply, or it may be that there's a new bunch of people that have said, look, I got frustrated last year and I'm going to buy now. So the average price,
So
we've
we'll
had it
go into
pointed
that.
out
You know
to
what?
me.
I realized I was a bit excited and we were still on the sales part of it, but let's stick with the numbers first, the units first, and then we'll go into the price. So
Sure,
let's
okay.
talk
Well, the
about
next one is the Toronto Real Estate Board's representation of, except it's January to December, where you can see there's an up and a down. Each one of the colors is a different year, and always December is a slow year. So I put that in there just to show their beautiful 4-year ones chart in all its technicolor glory. And if we go to the next one, we separate. Oh my, we're missing one. Oh, well, I guess we aren't missing one. Okay, keep going. The next one yeah, that one is listings. And we see the average dot 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 4 and 10 year, I'm sorry, 5 year and 10 year average, almost the same, just below 5,000. And I was completely surprised by the low number of uh, only 3,886 new listings in the month of December. And it seemed a great number more than that to me of 1,043 duplicates. I'm not going to fight them. It's the same ratios it's been every time they report it. So I guess I have a bias, just like I accuse them of having a bias. So I'm not going to say anything about it. However, the number of net listings, if you take away the do-overs away from the new listings, is 40%, 39.11% below the normal for December. Now, can you infer anything? Can you assume anything from December? No. There's so few sales, so few listings that an inventory goes plunging down, as we'll see in a second, that you just have to say everybody's on vacation. That's all you can say.
Well, I guess that's what I was going to ask you, but you answered the question about inventory. So when we look at, well, this is your monthly sales.
Okay, well, there's the one that somehow I put them out of order when I sorted them. So this is where we break down 905 from 406. And it's not really fair to 905 to do it that way because they're three distinct neighbors. But what you see is that 905 is 26% below the 10 year, and 416 is 32% below the 10 year. So it's a quiet December. It's a quiet December. Everybody went on holidays, and many people took the property off the market, as we'll see when it comes to inventory. And let's give it 6 weeks before we know what's going on in
Well, here's
2024.
a question for you, Robert.
Yeah.
In previous years, I mean, of course, the sentiment in this December past is quiet, but in previous years, you had real like inventory really getting diminished. You had people getting
Wait till
into.
you see. Wait till you see. I got mud on my nose and egg on my face and everything like that. Look, wait till you get to the inventory. It's the next one.
All right, let's go to inventory.
See, it goes plunge, plunge, plunge down. When I was monitoring, it was going down every day, every day, every day. Where there was terminate, 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 suspend, terminate, terminate, terminate. So it got down to 10,370, which is still 20%, depending on what, 35% above normal, but way, way, way down from the nearly 19, like nearly cut in half. So not all those properties disappeared. Some of them will reappear in the January the 15th. As I always say, the spring market starts the Saturday after the kids go back to school. So that is, they go back to school on the 8th. And so next week is the start. So we give it 2 weeks before we know really what's happening in January.
All right, so make sure you stay tuned and keep watching episodes so that we can help you track the market. And let's look now at months of
Months of inventory. Again, a reflection. It's just arithmetic. The number of sales divided by the number of listings in inventory. Inventory crashed down. So now we got 3 months of inventory. Good. We were up at 4. Now we're at 3. Can you tell anything from December? No. But that's what happened. So the next one is days on the market. Now, days on the market is always a good one because the difference between the blue line, which is for the property, meaning the same property, the same owner, the same real estate brokerage within the currency of the original listing period. They may try to go put the thing through the listing 3 times through the system, but they all counted up, added up to 49 days for a property to sell. And on the listing itself, it's gone up a bit to 32. You can see the lines both going up. Can you tell anything from December? No. But you can tell the difference between all the iterations of a listing, and it adds 17 days. So 2 weeks. Is that a lot? Out of 32, it's half. So, it depends on what you want to read. That's what you see.
All right, let's talk about our former guest, Ron Hoth, who was on the show. Make sure
This
you
is famous Ron Hoth, and famous Ron Hoth because I do not have the data going back to 1990. This shows inventory going back to 1990 divided by sales. Nearly 18 months of inventory in 1990. We thought 4 was a lot. Nobody can believe it. All through the 90s, again, last time we spoke, I said there's a difference between now and the 90s, and that's the free trade agreement. We won't get into all that. But you can see plain as day the global financial crisis in 08, 09, where listings jumped up to 8, which is on our other charts. And then you can see down there around 20 where it goes up in the lockdowns for a couple of months up to 4, and then recently to 4. So um, bad is a relative term.
Oh, so it's always what you'll notice here is there's always, as you said, bad is a relative term. It's always there's always an impetus. There's always a cause
Yeah,
that
cause and effect. Yeah.
cause and effect. And
For
so,
people to stop buying and for people all of a sudden to say, oh, I better sell this.
and at the same time, with every negative effect, and as months of inventory has gone up, what comes up goes down, right? So with it,
Normally, interest rates are up when you see those spikes,
Mhm.
if there's such a thing as normal. Okay, so here's our sales to listing ratio. Now look at those lines both jumping up crazy. So if you subtract the net number of listings, you get a seller's market at 121% of sales as a ratio of listings. Yeah. But 88%, which is even what the Trev one shows, 88%. Now this is definitely a seller's market. Now, how can it be a seller's market when it's so lousy? Because it's not lousy. People will see that a lot of houses did sell in December. And in 905, they sold all over the place. There's buyers looking for the best ones, and they did grab them. But there was not any new ones coming, which exacerbated the short supply.
So really, the market is not as bad as we've been thinking it was, or the media has been putting out that it was, and other
Well,
agents.
they can't get around it. The Treb standard method says it's a sales to listing ratio of 88.63 and over 665 is a seller's market. So you can't deny it. But again, it's December and it's a weird market. And okay, so here's the Treb version of it. Then always in December, it's big. The blue and the green, big up at 1.2 were hot market. And this one's just at 88%, which is still pretty darn hot.
Well, okay, so let's look at this. I mean, 2020, 2023, you're looking at pandemic year and then high interest rate year.
Mm-hmm.
Why, curious, Robert, this is personal curiosity. Why has sales to new listings ratio have been high each December leading up to the following year's
Okay,
market?
well, in 2020, if you remember, it was dead and then it got hot. And so this is a ratio of diminished number of sales, diminished number of listings, but the ratio of what percentage of the sales of the listings were sold relative to listings. And so that's why it got up so high. It was a hot market going into 21, into 22, not a hot market going into 23. And now we have a hot market going into hotter market going into 24.
And that's the interesting part about this is, again, we use the term real estate haters tongue in cheek, but when you look at trying to counter the real estate market, and again, there are real estate professionals watching this. So Robert and I, for full disclosure, are real estate brokers, and you'd expect, of course, real estate lovers, whatever you want to call us, will say buy real estate, buy real estate, buy real estate, despite the media saying otherwise, and talking about the high costs of mortgages and the unaffordability, the shortages, and all of that sort of stuff. But look what's happening here. I mean, the numbers can't possibly suggest anything else other than there's still interest. Rather than not that there's still interest, but there's actually pent up interest leading into this year.
That's right. People are on the sidelines. And as we've been saying all the way along, good stuff is getting gobbled up.
There you go.
Okay, so this is our Mitch Corman graph where we look at the sales over $2 million and what percentage they are of the whole. And so this blue line is a percentage of the whole, and we see it the share for last year, just under 7%, was not the highest ever, but better than the 3-year, better than the 5-year average. And why do I have short averages there? Because they just started doing it. I don't have it built up backwards. So everything's fine in the. Okay, here we go with prices. Now, we'd done this a few weeks ago when we thought we guessed that the price was going to go down almost 3%. Instead, it went up nearly 3%. Now, is it a whole hill of beans? Well, it's $30,000 variation, but it still leaves us as the second highest December. I'd said it was going to be 1051, so it's 1084. That's great. And as we see from a year ago, we're down a tad. From 1 month, we're up. From the peak, we're down. We're 81% of the peak. From January, the end of January 23, we're up a bit, and we're up a tad from in 1 month. So it's not bad being the second highest,
Well,
especially when the
what's a
record was the
fair
highest.
what's a fair comparison here? So, Robert, you remember when we opened, I used the average price, the annual average price, and now that's been recorded because 2023 is done.
Yeah.
And, no doubt the media, real estate agents, whoever, when they reported that the annual average price is down year over year, you're also looking at situations when you're looking at monthlies that are up year over year, and that creates confusion. Average is a confusion, as we've always
Well,
pointed out. So
in 5 years, we'll be looking at the average annual price for this year because it's that's all the only number you can. But remember that in 2023, we had a hot front and a lousy second half. So how can the average represent the whole year? It can't. What we
that's
have to
exactly.
do, if we're looking as realtors, as registrants, we're looking 60 days ahead.
So there it
Beyond
is.
that, it's the period of time when you'd have a listing, when you'd have a buyer. You can't predict, you can't anticipate more than 60 days into the future. So you're right. You got the annual price, which on some of my charts I use. You got the monthly price because we say that June is not like December and you can't do a seasonal adjustment on it. And then you got the HPI, which is a blend where they try and again blend it all out. So it's a way where you try and make a prediction if you're in a
And I
ivory
guess,
tower far away.
and that was the explanation I was looking for, is the fact that many of our real estate chat viewers who don't look at this as much as we do, I mean, we look at it every single day. Some of us look at it every single hour of every single day to analyze this. Is remember this. Remember what happened in 2022, which elevated last year's price. So of course, 2022 versus 2023, there'll be a big story in terms of why 2023 dipped below 2022, and it's because of this peak, right? But anyway,
So, yeah, if we go to the next one, so we looked at this also 2 weeks ago. And so the blue line, this is the calendar year again. I'm sorry, the school year starting in September. So our blue line is tracing, and now it's broken up a bit from the previous year. So we have this huge gaposis of down a bit to up huge between the red line and the other blue line in the future. That what is it going to be? Yes, it's going to be somewhere between huge up and down. And probably slightly up is where it's going to end up.
and this is where I kind of snuck in and said, what's going to happen to prices?
Yeah,
And typically seasonally, if you wanted to bet or gamble, not that real estate is a gamble, but typically it's going to go up in the spring just because of the fact that average prices of homes that sell in the spring, plus that
again,
you
the average price is a blend of all the ones that sold. If nothing sells in a month except for two townhouses, then it's the average of the two townhouses. If nothing sells except for two on the bridle path for $13 million, then the average price goes to $13 million. So it is an indication, but it's not perfect.
no, it's not.
Okay, if we jump, now I see what happened. If we jump to this one, which is where we put all the peaks together in one place and then project it out saying, what's the future going to be? We have a little purple dot running out to we sort of have a steady price with slow sales. Now, this is weird. People say, how, if the sales are so lousy, can the price be steady? Because people are not dumping. There are a certain number of people who are dumping, as we talked about the 5 classes. Investors who are underwater, yes, they're dumping. But there's not a lot of them, and they're not dumping all at once, and they're dumping all over the place 5 houses. Who cares? The greatest number of people are not moving, and the greater people who own houses that want to move, they're being very cautious, and they're not selling until they buy something. So prices are not collapsing, and that's what people who feel that the prices are overbought, we're bid up, are quite right. We're down 20% from that. So how much do you want it to come down? 50? You're not going to get 50. You're going to get, as we see here, maximum 30. And we haven't got a free trade agreement knocking the stuffing out of the Canadian economy to make it go down that extra 10. So it looks like we're bottoming pretty soon.
Well, what's going to be very interesting in our conversations is it's going to rest on what interest rate decisions this year and what kind of confidence that injects into real estate chat viewers and buyers in terms of making the move.
100%. And then anticipation of that, who's going to jump and then get a short-term financing to wait till interest rates come down by 2% in 2 years. So here's again our fearless forecast into the future. That's a year from now. That we take today's price, and that's sort of the blue line, and then a whole bunch of dots going out into the future. If it continues to go between peak and now, we've had almost 1% a month. So if we take minus 75, minus one and a quarter, minus 150, we get down in 1 year from now to these various prices. One is 990, which is 25% off. So we're already at 18, so another 7%. That's very doable. Very doable if people all stay on the sidelines. And is it going to go down a point and a half? I don't know. It hasn't gone down a point and a half a month. It's gone down a point. So there's 961. I think we had another chart that showed 961 or 971 as a previous peak from the time before last. So these are all possible. And again, they're 30% off, 28% off, 25% off. Could go down a little bit. If we have something terrible happen, could go down a little bit. But consumer confidence is the thing that is supported by interest rates, is supported by employment, is supported by government behaviors, but supported by world events. And there's just too many things to go together to say what it's going to be.
No, I mean, in some of our comments from our real estate chat viewers, some are asking, what kind of credit issue or credit crisis could possibly result in, let's say, interest rates not dropping or not declining. In previous episodes we've covered as well, economists calling for the first interest rate drops or declines to start in April, May, June.
Yeah, well, that's the only thing that's the problem because it's such a consensus that the consensus is always wrong. So, will there be some sort of a calamity, or will people jump like crazy like they did last March? And so, our Tiffany Macklin said, I got to raise interest rates again to stop them from buying. So, will that happen again? And I've said it too many times to say it again. So, you could have a war somewhere. That could be good and bad. It's a U.S. election year, which is normally very good for interest rates. There's going to be a lot of spending in Canada this year because they're getting ready for an election in 2025. It's not going down. The prices are not going down. Interest rates will be going down. And so this is our inverse relationship that I've done a very beautiful job of renumbering the sheet to number 46. That shows one chart that we don't use anymore, but at 7%, the purchase price average will probably be just under 800. At 4%, it'll be 10,051, which is about where we are now. At 5%, it'll be 950. So that's down a bit from where we were. It's going to come down for 7%. It's going to come down from 6%, but it's not going to 2% ever. So monthly payment buyers on these big ticket purchases, they can pay so much if they have two incomes, but they can't pay unlimited. And if they're uncertain about their job, then they can pay even less because they got to be careful.
Oh, by virtue of that, would we ever see a peak? Because I'm sure, I mean, Robert, how many years have you been doing real estate now?
And more than 45.
And if somebody ever told you back then when you first started and when you first got your license that one day the average price of a home will be 1.2 million, what would you have done?
Well, it was 68,000 when I started, so I would have bought everything in sight.
There you go. So at 1 million, at 1.1, 25 years, 35 years, 45 years from now, for the real estate chat viewer who's going to get a license and have their license for the next 50 years, you could just do the math and try to figure out what prices will that be. But then you have to figure out, will employment, will income support those numbers at that point? But it went from 68 to a million.
Which is, it's unprecedented. We've had inflation like crazy on 3 occasions in there. We had interest rates go to the moon. It's been an up and down journey. Ron Hoth has a beautiful chart showing going swooping up like an airline. And the last 10, you could have rented until 2003 and done almost as well, allowing for inflation as if you bought something in 1975. So you can't look back. You can only look forward and decide, do you think there's going to be a calamity? If there's going to be a calamity, then buy gold bars. If you think there's not going to be a calamity, then how good is it going to get? Is it going to be fabulous, wonderful, pretend? Then maybe you can do like day trading. But you don't normally day trade with the residents of your family. You find the best you can that you'll always be able to afford and that you want to hang on to in the worst case scenario. So It's not a commodity. And as the Remax chap, Pulsler, I think was, who said you can't live in a mutual fund. It provides a utility that you don't get from anything else. You can rent it for a certain amount of money, or you can live in it and enjoy the benefits of home ownership.
Absolutely. Last but definitely not least, this is 416 versus 905. What are we looking at here?
Yeah, well, the more we look at the difference between 905 and 416, we live in 416, and so we have a certain 416 focus, but this is where everything comes from. The price is higher on average in 905, but that's winnowing. It was higher before it hit 2 months earlier and 2 months higher in 2022. That's where the investments were all happening. The non-occupant owners, investors, speculators, whatever you want to call them. So um, they are doing their best to stay um, happy in their investment. I think they're going to sell those investments. And if they can find somebody to buy them, away they go. But there's a slight difference in timing and in intensity between 416 and 905 we try and monitor.
All right, so Robert, 2024 real estate chat viewers have been following us for a while now. Some have just joined this journey of ours. Spring market, we've been tooting the horn of spring market since fall, and now the time has come. And as you said, it's going to be a week this weekend because kids are back to school next week. Next weekend is when things really starting to get going. Real estate chat viewers who have been sitting on the sideline as buyers, or those who are looking to make a monumental move, whether they're right sizing to get the right space, or somebody just got married, or things happen in relationships and needs change.
Mhm.
What's your advice?
Okay. Every year in January, there's a fight between last year's price and this year's price. And it's already happening in that the last year's price, what nobody wanted to pay last year, now they're all being gobbled up. The new listings, which will start appearing coming on Monday, you'll see listings that we haven't seen since for 10 years, others that we haven't seen since Halloween are back on the market, perhaps at a higher price. So will last year's price all sell out, leaving these ones at a higher price to prevail, or will these new ones try it at this price and then have to come down because there's no demand at anything other than a little bit less at last year's price? So now is the time to look and to examine and to decide what you want, how you're going to finance it, how bad do you want it, and never mind what it says in the Toronto Star, never mind what it says in any of these the sky is falling places. If you want to find a permanent residence, then you want to find a permanent residence. It's not an investment except on the 25-year haul. 25-year haul doesn't matter whether you pay 20,000 more or less, doesn't matter. You want to buy the good thing. So what should they do? They should do, dare I say it again, what's right for them.
There you go. So thank you so much for your insight, Robert, and thank you for all of you who have continued to support our channel in the past year. And we're looking forward to delivering more news, insights, data, strategies, advice, ideas for you in the year ahead on Real Estate Chat. Thanks for watching. Take care and bye for now.
See ya.